Okay, සිරුදනාටම සුබ දවසක්. All are welcome to my YouTube channel. Today I am going to teach you economics. That is an important subject available even in local advanced level syllabus. So, what is economics? As a new student or as a new hand, you all should know a definition for any subject. What is economics? Economics is also science, which tries to fulfill unlimited wants of humans in a society by using limited resources which have alternative uses. I will give the definition again. Economics is also science, which tries to fulfill unlimited wants of humans in a society by using limited resources which have alternative uses. So we can have different definitions given by economists, but that is enough for you to understand. That is a simple definition. Okay. Then in economics we have different branches like microeconomics, macroeconomics, managerial economics, development economics, like that. But here we mainly focus on only microeconomics and macroeconomics. Those two parts are available in your syllabus. What is microeconomics? What is micro? Microeconomics. You know, here micro means small. This term micro comes from Greek language. Here, if you study the each individual components in an economy, then it is called microeconomics. If you study each individual components available in economy, then it is called microeconomics. For example, if you study about consumer behavior in a market, or if you study about market price of the product, or if you study about market demand, market supply, or market equilibrium, then they all are coming under microeconomics. You understood simply what is micro. Then we can go to macroeconomics. Here, macro means large. It is also coming from Greek language. Macro means large. Here, if you study the whole economy as one unit, that is called macroeconomics. If you study the economy as a whole, as a one unit, that is macroeconomics. Under this, we study countries' inflation, countries' unemployment, countries' employment, countries' gross domestic production, countries' international trade, or countries' exports, countries' imports. Likewise, we study the economy as a whole, then it's called macroeconomics. Right? You simply understood second concept, macroeconomics. So we have got another two concepts with these micro and macroeconomics, that is positive statements and normative statement. What is positive statement? What do you mean by a positive statement? You know, a positive statement is a statement which is really dependent on facts or evidence. They are really objective statements. Depending on given facts or evidence, you can prove it. Then you can reject or accept. For example, if you say inflation rate of Sri Lanka is 5%, that is really dependent on evidence, facts. You can accept that. Or if it is wrong, you can reject it. Another example, unemployment rate in Sri Lanka is 18%. That is a positive statement. It is dependent on given information, evidence, facts. Another example for positive statements, you will say gross domestic production in Sri Lanka is 150 billion. The value may be different, but it's really positive statement. It's dependent on facts or evidence. So you understood example for positive statement and definition for positive statement. Then we can move to normative statement. What is normative? Normative statement are really subjective statement. Normative statements are really subjective statement. They are not dependent on evidence or facts. They are just personal opinions. Normative statements are really personal opinions. Therefore, they are not dependent on facts or evidence. Then they are just judgmental statement. Then, for example, if you say government has increased the price of petrol by 50 rupees, then somebody can say increasing the price of petrol by 50 rupees is unfair for the motorists. That is a personal view, personal opinion. Somebody say government has to provide new job opportunities for the graduates. That is also personal opinion. If it is another one, government should implement new projects in the country to develop the country like that. That is a normative statement. That's really subjective matter. If you take another example for normative statement, government should try to reduce the inflation rate of the economy. That is also personal opinion. They are really subjective. Then you understood in simple manner normative and positive statement. Okay. Then we will understand another three concepts which have interrelationships. Number one, scarcity. Number two, choice. Number three, opportunity cost. Opportunity cost. What is scarcity? You know, our wants are unlimited, but our resources are limited. Therefore, we have got a gap between limited resources and unlimited wants. That is called scarcity. The gap between limited resources and unlimited wants is called scarcity. We have got a subject called economies because of scarcity. We try to solve the problem of scarcity by using economics. Right. Now we can come to choice. You know, even in our scarce resources or limited resources, we have alternative uses, different uses, options. Therefore, we can't fulfill everything. So we will have to select the best option. When you select best option, that is called choice. Selecting the best option is called choice. Selecting the best option is called choice. Okay. Then, when you select the best option, you will have to reject all the other options. Then, among other options, the best one is called opportunity cost. Among other options, when you select the best option, you will have to reject other options. Among other options, best one is called opportunity cost. Or you can just define the cost of next best alternative foregone is called opportunity cost. The cost of next best alternative, because we selected the best one, the next best alternative. The cost of next best alternative is called opportunity cost. These three concepts are interrelated: scarcity, choice, and opportunity cost. Okay, you understood simply scarcity, choice, and opportunity cost. Then we can move to another concept. You know, even in our definition we had wants and needs. What do you mean by a need? You know, need is a thing which is essential for us to survive in the world. A need is a thing which is essential for us to survive in the world. For example, if we take food, that is essential. That is a need. If we take clothes, it is essential for us to survive. That is a need. If we take shelter, houses, it is a need. Then if we take medicine, water, they are essential for us to survive. Then, what do you mean? A want. Want is a thing which is not essential for us to survive the way. Then, for example, if you take a house, that is a need, but we can take luxury house, it is not a need. It comes under want. If you take food, it is a need, but you can have your breakfast being in a hotel or luxury goods, they are coming under wants. If you take clothes, that is a need, but if you want to wear expensive clothes, very expensive clothes, they are coming under wants. Likewise, we can classify wants and needs. Then, even in the definition we use resources. Our resources are limited, but even in our limited resources, we have got alternative uses. Alternative uses means we have options. For example, if you have 100,000 rupees, you can deposit it in a bank, or you can start a new business, or you can buy a laptop. Likewise, we have optional uses of our limited resources. Then we will have to select the best option, that is called choice. When you select the best option, you will have to reject other options. Then among the other options, best one will be opportunity cost. Okay, then we basically understood these concepts. Number one, definition for economics. Number two, microeconomics. Number three, macroeconomics. Number four, positive statements. Number five, normative statements. Next, number six, relationship between scarcity, choice and opportunity cost. Then we understood wants and needs. Then we will move to another definition or another concept. That is, what do you buy? Economic goods and free goods. Those goods which we have produced by using limited resources are called economic goods. Those goods which we have produced by using scarce resources or limited resources are called economic goods. If you take refrigerator, laptop or vehicle, they all are produced by using limited resources. They are coming under economic goods. What do you mean by free goods? There can be goods which are given by nature. They are gift of nature. They are called free goods. For example, air, sunlight, river water, sea water, no opportunity cost, no honor. Therefore, they are called free goods. Then how can you compare economic goods and free goods? If you take economic goods, there is an honor. But if you take free goods, no honor. If you take economic goods, opportunity cost is there because you have to sacrifice. When you use one item, you have to sacrifice another item. But when it comes to free goods, no opportunity cost. Then third comparison, no price for free goods, but economic goods price is there. Then if you take free goods, no scarce resources, abundant. That means it is not limited. But if you take economic goods, they are limited. Likewise, you can compare the difference between economic goods and free goods. So, we will move to again another concept under natural resources of free goods. We have two types, renewable goods and unrenewable goods. What about renewable goods? Renewable means when you use, there can be decrease in the quantity, but you can again renew, you can enhance the quantity. If you take water, forest, then they are coming under renewable. What is unrenewable or non-renewable? Those resources which cannot be again increase the quantity are unrenewable. For example, if you take coal mines, gem mines or crude oil, when you extract the resource from the quantity, then there can be decrease, but we cannot increase the quantity. So, you understood the difference between renewable and non-renewable, then we can move to another concept available in economics, that is factors of production. You know, we have to use factors of production to produce goods and services. Under that we have discussed 4 factors: land, labor, capital and entrepreneurship. Whatever land, you know, land is gift of nature. It is just not for plot of land. Everything coming on the land is called land. Everything given by nature is land. If you take rivers, forests, right, gem or coal mines, everything will be on the land. Then the return for land is rent. Next factor is labor. What is labor? That is the physical and mental effort done by the people. That is the physical and mental effort done by the people. That is called labor. The return for labor is salaries or wages. We can improve the usage of labor by giving education, training, like that. Third factor is capital. What is capital? Capital is the man-made goods. Man-made goods. Example, equipment, machineries, they are made by man. The return for capital is interest. The last factor is entrepreneurship or enterprise. That is the factor which has to collect and organize other 3 factors: land, labor, capital. The return for entrepreneurship is profit or loss. That is the risk-bearing factor. So, we understood basic concept in economics. Then, please don't forget to subscribe me. Below the video, there's a button, red color button, subscribe button. Then press that button and click the bell icon, and also you can switch on your notification. Then I can easily send you my next video. From my next video, I will discuss the balanced concepts available in chapter 1. Then it will help you to improve your understanding about economics. Thank you very much.